Hello, I'm Sam Meredith and welcome to the weekly wrap-up, where joining me to discuss the movers this week is market analyst with CMC Markets, Colin Cieszynski. US Consumer Price Index data was released today, which came in slightly higher than expected at 0.1%. But how does this impact on the Federal Reserve's decision in terms of the next interest rate announcement?
In the short term, it looks as though the U.S. dollar may start rebounding. I think we're going to continue to see quite a bit of volatility right up until the mid-June Fed meeting on the will they or won't they raise interest rates and when are they going to start. Just over the last couple of days, we've seen some soft U.S. data which suggested that the Fed may hold off for a while. However, this morning we had U.S. inflation numbers came out, and both the real average weekly earnings as well as core inflation both came in a little bit higher than expected and were increasing. So it suggests that the Fed, there are still the potential for growing price pressures in the United States. That could keep the Fed on pressure on the Fed to start increasing interest rates sometime later this year, even whether they do it in June or not.
The European leaders have met in the Latvian capital of Riga today as talks over the future between the 28 EU member states continue. German Finance Minister Wolfgang Schäuble has said that should talks between Greece and their international creditors fail, then the possibility of the drachma running parallel to the euro should be considered. This has sparked a very sharp fall indeed between the euro-dollar. What do you make of these comments, and is this a feasible option?
It would seem to me that at this point anything is on the table, and people really should be expecting anything that could possibly happen. I mean, certainly we do get a certain amount of posturing going on both sides as negotiations progress, and we hope they will somehow reach a deal that can keep Greece in the Eurozone. But traders and investors do need to be prepared in case things do go off the rails, or there's a miscalculation, or something happens where things go the other way, where Greece could end up having to leave the euro. So at this point in time, markets still seem to be expecting a successful resolution. The drop in the euro, it's interesting because the drop in the euro today came about at the comments that did come out from Minister Schäuble came out at about the same time as the U.S. consumer price report. So as much as that had an impact on the trading in the euro today, we also had the big U.S. dollar rally on the inflation numbers were also a big factor.
And lastly for today, which key indicators will you be looking out for next week? Are there any potential surprises in store for us to keep our eyes on?
For next week, it's relatively quiet for earnings. We do get a lot of our regular month-end data. There's a lot of data in particular coming out from Japan over the next week. The big number that we could see a surprise in would be the U.S. GDP figures, which come out on Friday. The Q1 had been quite soft, but there's been a lot of talk from various quarters in the United States that perhaps there's something wrong with the way they're calculating GDP, that the way they've been doing the seasonal adjustment for Q1 seems to be off, because Q1 has been consistently weaker over the last 2 years. So there is the possibility of some revisions there, and people will be looking to that to try and get a better feeling on what the Fed might do a couple of weeks later in mid-June.
Thank you, Colin. For more updates and to see how the markets are shaping up next week, join Louise McCauley for the week ahead on Monday. Goodbye for now.